Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, the first thing that we have to identify is that the market is currently testing a quite strong historical support and demand area. From here, in fact, multiple rejections to the upside have been created. Every single time the market tested the zone, it rejected it to the upside quite aggressively. And in a situation like this, we could expect to see more bullish price action to be created. Since the market just tested this zone again, as already happened in the past, every single time that the market tested this exact same demand and support zone. So from a long-term perspective, we have to keep in mind that the market is rejecting a historical support level. Now, if we zoom into the most recent price action, there are two important things that we have to identify. The first one is that the market is currently printing this inverted head and shoulders pattern. We have the left shoulder here, the head here, and the right shoulder here. We have to also notice that the left shoulder zone by definition is a support level because here there is previous support which is now currently again acting as support. And we have to also identify that as we have an impulse and correction, if we want to measure this correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 and 0.786 Fibonacci retracements, both lining up exactly in this area of price. And this creates confluence of support. And since we have a confluence of support area, this increases the probability of seeing institutional longing inside of this confluence of support. And we will be speaking about institutional longing in just a few moments when we move to the commitment of traders analysis. For now, let's just keep this in mind and move down on the weekly time frame. Now, from a weekly perspective, the situation is clear. We have a market which is currently testing previous weekly resistance from which these rejections to the downside were created, which is now turned support here. The market is testing it, has already started rejecting it to the upside, so more bullish price action away from this level could be expected. We can also notice, if we go down on the daily time frame, that the market has just printed a very strong impulse to the upside. Now, after the creation of such a strong impulse, what you would naturally expect is first a correction and then the continuation to the upside, essentially for the market to establish an uptrend, which by definition is a series of higher highs and higher lows. So if we will see a correction here, what could definitely be the case is that the market might want to go and test this zone here, because this is a quite strong previous daily resistance zone from which all these previous rejections to the downside were created, which is now turned support. The market very often likes to go and test previous structure levels once they're shifted from previous resistance to support or from previous support to resistance. Now, in this case, we have a quite strong resistance zone, which is now broken to the upside. So there is a good probability that this market might want to go and test this previous resistance to see what kind of demand and support there is in it, and then potentially to reject it to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so essentially what hedge funds and the big players in the market are doing, the first thing that we have to keep in mind is that if we're looking at the data for the AUD, we're actually already looking at AUD-USD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, we went from having minus 107.5k net positions, so a negative net positioning with more shorts than longs, all the way up to having minus 15.8k net position, so a positive net positioning for this pair, because we had a massive increase. So essentially institutions have been increasing their longs quite a bit, going from 30.5k to 77k, so more than doubled their longs from an institutional perspective on AUDUSD. And at the same time, shorts have been decreased quite massively, going from 145k all the way down to 93k. So institutions are clearly moving back to the bullish side for the AUD, meaning to the bullish side for AUDUSD. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, here in the daily, as the market has the possibility of going and testing this level, there is a good chance that since institutions are already adding longs on AUDUSD, inside of this confluence of support, they might want to be adding even more. So if we will have a correction to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, and we continue to see institutional longing, at that point, I definitely wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.